Welcome to Making Your Miles Count Production, an educational program to all Canadian lease owner-operators with your host, Robert Scaper.
Chapter 6, Finding a Good Accountant. I guess right up front I have a conflict of interest. I have an accounting firm for independent operators, so I'd be steering a little bit biased, but I'll try and be as objective as I can. I think the first thing to remember about being an independent operator is that the independent operator in the accounting industry is basically low-paying freight. We're not really high-paying. There's not big margins. It's a labor-intensive, low-margin industry. Any accountant that wants to have a high earnings or higher earnings, they may have a few truckers, but realistically where they make their money is in other industries. It's not in the trucking industry. And we have to respect that. I think if they would start charging more than, say, $2,500 a year or something like that, we wouldn't be able to afford it, or independent operators wouldn't be able to afford it. It's not really fair for the industry. And so that's why a lot of independent operators get their taxes done not from a designated CPA. There are two different types of tax preparers: a designated accountant, like a CPA. There's different types of CPAs, but I'll just use the word CPA, a certified public accountant, and somebody who's not designated. Both of them can be fully qualified to do it. Canada Revenue Agency doesn't care at all who completes it. It's irrelevant to them. But in the end, let's talk a little bit about designated accountants. Is there an actual need for it, and why exactly there is a designation for that? I think maybe where we can start is, like I said, back in 2005 or 6, 20% of the independent operators were incorporated, and 80% were not. They were self-employed. The majority of truck drivers weren't incorporated, and their accounting fees were actually pretty low then, whatever, $500 to $800, $1,000, whatever it was. When it goes to incorporated, there's an assumption that you need a CPA to do a corporate account. And that assumption comes from two sources. One is CPAs. CPAs think that only CPAs can do it, not all of them, but that's the assumption. But also from bankers and financing companies. And that's where it's a little bit, it's inconsistent all across Canada, even among banks. The reason why people imply that you need a CPA to complete a corporate bank account is a bank may require it. Now, chartered banks, all 6 or 7 charter banks that Canada has, on their regulations, they say any corporate client has to have their returns with a notice to reader. And the notice to reader can actually only be done by a CPA.
A notice to reader is kind of like the cover page or the introductory letter that goes with the tax or with the financial statements.
Almost all notice to readers, it takes no liability, no nothing. It's just like, we reviews this, and this is with the documents, we don't guarantee anything, and that's it. So it helps absolutely nothing, because they're not taking responsibility for anything. In the end, then it comes down to the loans officer or the branch. How diligent are they with getting that document from the independent operator? Depending on what province you are in Canada, they're more enthusiastic of doing it. Say, for instance, Ontario might have a much higher request by the banks to submit that. But other places, they haven't asked for it for years, like it's hardly ever asked for. It's not consistently applied all around. And sometimes you can get a branch that gets a new loans officer or a new branch manager, and, before everybody was asking, then suddenly they don't ask, or the other way around. So it's very inconsistently applied. But from a practical perspective, because an independent operator signs for the personally guarantees the loan, the actual practical need for it it's not there. It's really not. It's just a bureaucratic request, and you could photocopy something, send it in, whatever. And realistically, it provides the bank no more or less information or guarantee or anything.
Yeah.
Like it's almost useless because of that personal guarantee. They didn't ask for it when they were self-employed, but they asked for it exact same business when it's corporate. It doesn't make sense. And a good loans officer understands that. They realize that, listen, this guy's personally guaranteed it. It doesn't help anything to get these documents. And the problem is, or the implication is, a CPA's notice to reader is valued at hundreds of dollars. So the independent operator has to pay for something that brings them zero value, brings nobody any value. That's the general feel on it. And realistically, in my opinion, banks all across Canada should just drop that requirement. If you've personally guaranteed anything, it doesn't make any difference. Now, if there's other industries, like even if you have your own running rights and it's a carrier, and the carrier goes to the bank and gets a line of credit for the operation of the business, well, then you need something from an accountant verifying the cash flow and the values and stuff like that. Then it's really important to get that. Or, for instance, if you're in the land development industry, and to verify the accuracy of what you're doing, if you're borrowing a huge amount of money based on assets or whatever, it does require, it can require that a CPA to do it. But you're a little bit of an anomaly in that you've done a lot of things and you've never used it.
Depends on the lender, right?
Depends on the lender, and sometimes it depends on the amount, not just your credit rating, but the amount of equity that you have. Like if somebody would borrow, if they have assets of $100,000 and they borrow, $95,000 on there, well, then you need some.
Make sure
but if
that
you're only
there.
borrowing 20, 25, 30,000 on there, the bank says, "Oh goodness sakes, we got triple or double or whatever it is." It's really not necessary. So just so long as the bank is covered, that's fine. My accounting firm, we don't provide anything at all to the bank, primarily because, well, we don't have debt for it. And if you don't have any debt at all, shout out to Dave Ramsey. If anybody listens to Dave Ramsey, it'd be debt-free living. If you don't deal with a bank in terms of loans, they're not going to ask for it because they don't actually need it. Though some loans officer probably might ask for it just from a technical perspective or something like that, but they're not going to boot you out, more than likely. No. And if they do, just go to another bank. There's nothing wrong with flipping to another bank when one becomes ridiculous, because it does happen that you get weird loans officers and stuff like that. So I do respect CPAs greatly, because there are some that have expertise that I absolutely do not have, and I never will have the level of expertise they do. There are even, I can foresee situations that I'm going to be in where I'm going to need a CPA. I can be an expert at lease owner operators, and absolutely I can, all the way to Supreme Court, know what I'm doing there, but I'm not a big, I don't know that much about,
Other industries,
whether it's capital development or anything, anything of a different nature. It is really important to have somebody who really knows what they're doing
in that area.
In that area. There is no accountant that knows everything on everything. That is just not out there. The Income Tax Act is just far too vast. So you should have your experts and your mentors and your counsel that in the areas that you definitely need. Let's talk about, I've talked about this a little bit before, but talk about liability. A CPA legally can be held liable for the returns, especially if they sign off on it through, not necessarily a notice to reader, but like a full audit and stuff like that. They can become liable for it. In the independent operator industry, though, I have never heard of a single accountant being held liable for something that was done wrong. and I do not believe the courts would enforce something. And if somebody tries to make a CPA liable for a $5,000 tax bill or error or something like that, that's ridiculous. It's going to cost you $10,000 to try and get $5,000 from somebody. It's our industry is just far too small, far too, I hate to use the word irrelevant, but our fees are way too small. Our liabilities are way too small for any of that to happen on a general basis. There is another issue when it comes to when you're looking for an accountant. You ask an accountant, do you stand behind the return that you file? And a lot of them will say, yes, we stand behind it. We defend it to CRA. Well, what does that actually mean, to defend it to Canada Revenue Agency? Does that mean that the accountant is going to go to the Supreme Court on their dime? They pay for absolutely everything? Or does it just mean that the accountant, once it's audited, the accountant will argue with the auditor to a certain point? And that's generally what it's meant by defend it. They will argue with the auditor, either accepts the accountant's position or bookkeeper's position. But if the auditor says, no, we're not going to do it, and keep on going, the next process on that is an appeal. And who pays for that appeal? Generally speaking, it would almost always be the client, the independent operator. There are a few accountants who just on principle alone would do it under their own dime. Like I know one guy who did it just because he was really ticked off at the auditor. But that's very, very rare. And generally speaking, almost every situation, the independent operator takes on all of the liability. The only exception, and again, that's our firm, we guarantee non-taxable benefits as filed, which is 95% of all of the tax savings right there. Everything else, whatever is handed in for paperwork, we may defend it face to face, but if they reject that, that's a different process. And it rarely happens because the independent operator the business model, it's actually very simple. You got one truck depreciating at a certain rate, and you got maybe 24 transactions a month. It's very simple. There's very few areas of contention, especially if our clients would do what we say, like your personal vehicle log, and there's way less paperwork in a personal vehicle log being paid cents per mile than it is to keep all of your food receipts and stuff like that. So that's generally how we operate. When somebody is interviewing accountant, and we've had a little bit of experience with this in your business. We went to one accounting firm and interviewed them, and they gave us their criteria for what needs to be done for your very specific situation. And then we went to another one, which most people actually probably don't do, because they say, well, okay, we went through all of this process. But we went to another one, and we actually get a different sort of a slant to it. One of the questions I think you asked the accountant is, how have you defended this to Canada Revenue Agency? And in reality, they say, well, we've always been successful. Well, what does it mean to be successful? Have you ever gone to court? And then we realize they've never gone to court with it. The question is, really, who are they working for? If they're building a firm so that they don't have any problems whatsoever, any conflict whatsoever with Canada Revenue Agency, are you overpaying? Or will you? Or potentially will you overpay because they just don't want any conflict whatsoever with CRA? So they'll present the most conservative aspect of your situation. Then we went to the other firm, and it was a little bit different. Did they say that they went to court either?
They didn't either.
They didn't either. Where was the one that said 2 out of 3?
That was
a different firm?
A different firm in Toronto.
In Toronto.
Yeah.
That said, okay, basically it said 2 out of 3 cases they win.
Yes.
And that actually says that they actually they're totally willing and able to go to court with it.
Yeah.
That is you actually have somebody actually in your corner. That makes a humongous difference. Now,
The fees must be also
must be high.
must be high.
Yeah, if they go to court, I mean, you're looking at minimum 10 grand, but probably more like 20, 30, 50.
50.
Or more.
Yeah. It has to be a big number
It has to. It
that
really
you're dealing
does.
with in order to make
So
that
you have
work.
to know the industry that you're in and what you're actually dealing with. Your situation was actually, I understood it, but it was so complicated. I understood the numbers and I understood what wanted to be done, but I didn't know all of the different ways to present it. And that's why I suggest we go to a CPA to provide your different options in there. And realistically, there's no way that I would ever want to defend an issue that I didn't have full confidence in. Mm-hmm. But I mean, that's the accounting industry. And realistically, you want to have an accountant that is not afraid of CRA or doesn't have policies that's there that will never, ever be contested. You have to be confident and not blindly confident. You still have to understand what they're doing. I have a friend who bought and sold a particular asset, and it was very significant. And he figured, "Oh my goodness, I'm gonna be paying lots of taxes." And he went to his accountant, and long story short, he paid nothing or very little to it. And I said, "Well, when you do that, how did he do it?" He said, "I don't know." And I thought, no, you should know. You can't just delegate that completely to him. No. And he said, "Well, he's a good guy." Well, what does that mean, a good guy? Like, that could be anything, you know. Like, I knew the guy too, and I knew he wasn't lying, but he has to understand how he did it, you know. And it doesn't make any difference if you sit there for 2 hours until you actually understand. You have to understand what you're doing. And a good business person, if they don't understand it, they won't do it. They should never do it, because you really have to know the ground that you're standing on. I encouraged him to say, look, go back to him and see how he did it. Maybe there was some, you know, lifetime capital gains things that he applied or something like that, because everybody has their own lifetime capital gains limit or something. What is it? I think it's 600,000 or 800,000 or something like that. I don't even know. Can't remember what it is. But if he used portions of it, well, at least he knows that, you know. And he's okay. Well, now I only have X amount of dollars left in the full thing. So understanding what you're doing is actually critical. You cannot blindly delegate it, no matter what, in my opinion, anyway. Non-designated tax preparers. I have a fair bit of experience. I'm actually not a designated. I don't have a CPA. I have an MBA. I could have been one if I wanted to, but once I did some studying into comparing, there was two different kinds. One, I could have been either a CGA or a CMA, and once I got into it, I realized at the highest level, like the last year and a half of it, a lot of it had to do with politics, and I got so turned off with it. I said, look, they both know very good information on this. But they were conflicting. Like, for instance, Ontario has a much higher acceptance of chartered accountants, whereas the West has a much higher acceptance of certified general accountants, CGAs. And if you wanted to go all across Canada, you're going to have abilities in one place and not abilities in the other. And like, it's not that at the time I knew I was going to be going across Canada, but realistically, that type of politics, there's excellent accountants no matter what designation they're under. So but I didn't like the politics, and I'm glad. I would have let my designation go, given what I'm doing. I don't need it, nor do I ever see myself ever needing it. It's not something that I would need to adequately serve the independent operator industry. So, but I do respect the CPAs, but there's an awful lot. I think the majority of independent operators get their taxes done at non-designated individuals. You know what? Even some independent operators that go to a CPA firm, the CPA is not going to be doing the paperwork for the independent operator. They hire somebody and get them to do it. And then they may look over it at the end of the year, but my guess is a lot of them don't. There are some, we've taken over clients from CPA firms. Some of the way what things have been filed, there's things that don't even balance that should balance. And you could tell that, oh my goodness, this was not done by an accountant that really knew what they were doing. This was, we have to do a whole bunch of corrections to make sure that things balance. And it's not a reflection of the CPA other than the fact that they're not overseeing anything. So about 20% don't balance that come to us. That's a huge percentage of people who are using CPAs. They're not even getting their dollars worth, on there. So, and there are some basement bookkeepers and, strip mall guys who have their own firms or whatever. Excellent. They can do, balance everything right down to the penny. Everything is perfect. So you have good CPAs and you have bad CPAs, and realistically, even the moderate to the good ones, they're in other industries, and they don't focus on the.
And again, like you said before, they don't specialize in one particular thing. Now they're dealing with all kinds of things and maybe doing somebody's taxes that they're not familiar with that industry.
Yeah.
And where you specialize in one industry and you're very good at it.
Yeah. And I'm very confident in I know this stuff, because there's sometimes guys who come up and says, look, I'm going to buy a new truck because I want to keep my taxes down. Well, that's not the reason to buy a new truck.
It used to be.
Oh,
years ago. When I first started
I understand that point to some degree. The newer truck, like we were discussing this the other day. In 1995, everything went from mechanical to electrical?
94.
94? When it went from mechanical to electrical, there was basically a 1 to 1.5 mile per gallon better fuel economy. So the newer vehicles were much better in cash flow, starting in maybe 2001 to 2007, somewhere in there, when all of the pollution control devices came in. The fuel economy actually started going down.
It did, yeah.
And so buying a new truck, exactly opposite of the 2004, 2005 difference.
Yeah.
Why would you buy a brand new piece of equipment and have worse cash flow? That's a big, big problem. And now it started to turn around a little bit in 2019 to 18, 19, 20 in there when the newer models started getting better fuel economy again. That's a real unusual issue. If you have a brand new truck and an old truck both getting the exact same fuel economy, and your maintenance issue is under control with the old one, I would much rather pay taxes than to upgrade into a new truck, especially with the price of the new trucks nowadays. Yeah. It's ridiculous. From an asset perspective, there's, in my opinion, fuel economy and maintenance are the only issues to do it. Taxes should not be the reason why somebody buys a newer truck. I'd say 98% of the time it should have nothing to do with it. I had a client in a different province. They had a very specialized work that they did, and they were getting high margins. And he would buy specific trucks that were high value, and then every 3 or 4 years he would flip it into another high value truck. Fuel actually was less of an issue for him because his margins were so high in that regards. He made money on the purchase and resale of his truck, but he really knew what he was doing. It's either he lucked out, but every time he sold his truck, his depreciation was, I guess you would say, minimal in that regards. So there are examples where I'm proven wrong, and it is wrong. Maybe old. See, back in the 1990s, even 1980s, it almost made sense where you could buy a truck, drive it till the warranty was off, and then take the equity in it and put it into a new one, and you keep on doing it. And eventually, and it takes a good 10, 15 years or so, you don't have to borrow anymore because you have enough money and you own it free and clear. But those numbers aren't there anymore.
No.
The truck values have increased far too much. Depreciation goes down. It's just not there anymore.
Well, the fuel mileage, when the computers came in back in 94, I had a 96. The fuel mileage was absolutely exceptional. It was probably at least 1/3 more than what my previous truck was, which is huge.
Yeah, that's huge.
It makes the payment of the truck.
Yeah.
But the maintenance wasn't there like it is today.
Yeah.
We are now back up like 08 to late 10 when they came in with the regen system. They were absolutely brutal. They were worse than the first trucks we bought, the mechanical ones.
Yeah.
And a lot of guys lost their shirts on those.
Yeah. I had a client who 1 year, they bought a brand new truck, and within a year they spent $30,000 on the regen. No, it was the third year. They just ran out of the warranty. They spent $30,000 on their pollution control. The next year, $40,000, and then they sold the truck. All the equity they had there, it was gone, and they had to borrow money to get out of the industry. Pollution control can absolutely kill an independent operator.
The new trucks are getting very, very good fuel mileage again.
Yeah.
Very good. But where the guys are spending the money is on the pollution stuff. The wiring system on the trucks now is half the thickness that it was before. So you're having a lot of wiring issues, a lot of sensor issues, which can be very expensive. A friend of mine broke down in Pennsylvania, and just they had to replace a sensor, and they didn't have the sensor. But that sensor cost him $8,000
Oh, man.
because he had to get the truck and trailer towed because he was on interstate.
Oh, yeah.
And the sensor itself was like $400 or $500. But then they had to bypass the sensor in order to get home, and then they had to redo all the work back home again. It ended up costing him over $10,000 for a $400 sensor.
Yeah.
So, yeah. So the fuel mileage, it's great now, but
Maintenance issues huge.
Maintenance is huge,
back
yeah.
when I was driving with my wife to rebuild an engine, we totally rebuilt an engine. I think we did $11,500 or $12,000. I mean, that was right front to back. Well, now it's like what, $35,000, $40,000?
40 is very on the low side, yeah.
Oh yeah,
Yeah.
Like that's
Well, Cummins, I talked to a guy just recently, the last couple of weeks. They're rebuilding a 2019. It's got a Cummins engine in it, $65,000.
Wow.
Like,
Yeah.
it's amazing.
yeah, and
That hurts. Like for
it hurts.
a normal operator, a 2019, you're just off of that warranty, or you might still have warranty, but if you got to do that off warranty,
yeah.
you can't afford to fix that truck.
Well, you can't afford, but can you then walk away from that and purchase $180,000, $200,000 truck?
No.
I say, you know what? It's better. $65,000 is better than nothing.
Yeah.
You know, at least it increases the value of the truck because you got a rebuilt engine now. That thing will last you 4, 5, 6 years.
Yeah, and even
Something
back in the early 90s, mid 90s, the maintenance wasn't that big of an issue, so anybody could drive a truck. But now with the new equipment, you can't not know nothing.
Yeah.
It's a business that you're running. You've got to treat it like that, and you got to know what your equipment is doing.
Yeah.
Because if you don't know anything about the equipment, it's going to really, really hurt you. Like we were talking yesterday.
Yeah.
There's guys that don't even take screwdrivers along in the truck.
Yeah.
Like they don't know anything, and I'm under my truck every week
Yeah.
and looking at different things. Like I got into a DOT inspection last year, twice in 6 weeks, same scale, and the first thing the guy asked me when he opened the hood, he said, "Who does the service on your truck?" I said, "I do." He said, "I can tell
Oh yeah.
just by opening the hood." And 6 weeks later, he called me in for an inspection again, and they had a new officer they were training. The first one was 45 minutes, the second one was an hour and a half. And I asked the guy, I said, "Why did you call me in again?" I said, "I passed with flying colors before." He said, "I wanted to show this officer what a well-maintained truck looked like."
Yeah.
And that is very important
Yeah.
because it can cost you so much money. And it's not just driving a truck anymore. It's,
Yeah. It's a real business.
It is.
You really have to know what you're doing. You're dealing with, couple hundred, $100 to $200,000 worth of assets sometimes if you buy a brand new truck. Well, 150 to 200, and if you don't know anything at all about it, maybe you should learn some other industry.
Well, you know what? Even like we found yesterday, we were looking for something specific that we were going to need down the road here. And so we went on YouTube and we spent a couple of hours looking at YouTube videos on how this was done, so you can do it efficiently. The same thing with trucks. You can go on YouTube and find out. Yeah. Like guys are always posting stuff on YouTube, what to look for to kind of troubleshoot it yourself.
Yeah.
Like where's this sensor? What does that sensor do? Like when you do your pre-trip, your air brake endorsement, you got to know how that air brake system works.
Yeah.
It's not just the brake drum or the brake shoes that stop that vehicle. There's a lot of components that have to work together. And where are those components and what do those components do? And it's the same thing with the new vehicles. And you can save yourself so much more money. And another thing is, if you can rent a shop or have your own shop, that truck is warm when you come home.
Yeah.
That is huge.
Yeah.
That's huge. You may think, well, the truck's still running up and down the road. What's the difference? It's outside. But it makes a huge difference.
Makes a huge difference for sure.
Yeah.
Okay, back to accountants.
Yeah, we kind of went on a rabbit trail here.
Good, nice rabbit trail. I've been in the industry for long enough to know that there are many different bookkeepers, non-CPAs, and some of them are excellent, and some of them are not. I have a fair bit of experience, not a fair bit, but it's kind of rare, but it is definitely out there for bookkeepers who lie. Just flat out lie. There was I won't mention the city, but there was a city where a bunch of operators were getting one bookkeeper to do and very few people paid any taxes at all. Very, very little taxes. And all of them, and they just thought that this guy was he really knew what he was doing. And it was quite a few years. All of a sudden they get audited, and the real question was, okay, there was receipts from the statement very clearly for X amount of dollars in fuel, and on the income statement, but on the income tax form, there was exactly $30,000 more in fuel than what the actual invoices had. And so it was very, very clear. All the guy did was just add $30,000 there, so the guy didn't have to pay taxes, right? Well, the auditor looks and says, well, where's the $30,000? Oh, him, ha. Yeah. And bottom line is 3 or 4 months later, the guy just disappears, right? But he's got like 30 or 40 independent operators now. They're all audited, and they're all reassessed, and they all owe money, and it's a terrible situation. That does happen. It's rare, but it does happen. Even locally here, there was in our city around here, there was a lady who would only meet people at Tim Hortons. Nobody knew where she lived. Nobody knew where their paperwork was.
I know one like that in Winnipeg.
Yeah. If you brought the paperwork to them, or to her, then she would go do it. Nobody paid any taxes or very little taxes, that kind of thing. And there was one client who got us to do a paperwork, and we did his taxes and showed him how much he owed, and he said, "Oh, that's too much." And I said, "Well,
it is what it is.
It is what it is, He says, "Do you mind if I go to this other person?" I says, "No, by all means, you're going to go and see what they do." So he brings it to this person, and then he comes back and he says, "Look, this person saved me $4,000. I said, "What? Wow. $4,000? That's pretty. Do you mind me taking a look at what they did?"
Right.
Not a problem. Brings it in, and I look at it, and I say, "Okay. Look what happened here. First of all, there was a month where there was no deposit because the expenses were above the miles. I guess they missed the cutoff date or something like this, and they had a whole bunch of miles that they didn't hand in on time, so they missed it. So there was some miles, but not all of it. And then the next month, there was a big check, but it was in the next year.
So
Okay.
she just pushed it over.
So, yeah, so she didn't, he, or whatever it was, they didn't claim that revenue at all. So it was a month and a half where they didn't have any revenue at all that was claimed, but there was some expenses that were utilized. And I said, can you see that? And he said, yeah. I said, so in other words, what that person was doing is basically fraud, because they're not following accounting principles, basic accounting principles, and they're not matching revenue with expenses. And this, if it's ever audited, is not going to pass. And he said, I see. I says, are you going to use them or are you going to use us? He used them.
Really?
Yeah, he left. He left, and I don't think
$4,000, well, he'd risk it.
He'll risk it. So realistically, he got somebody else to lie for him, and somehow in his mind he says, "Well, then I'm not lying," or something like that, Or, I mean, basically he was okay with lying to the government. I've been in the industry for well over two decades, approaching even 3 decades, and I have seen people lie on their taxes. Almost universally, not all the time, but when I've actually seen people do it, most of them, almost all of them, get away with it in actually lying to the government, because only in self-employed 15% of people are audited, only 15%, and in corporations only 5% are audited. So chances are you're going to get away with it, or a lot of it. And but I have watched these people over 10, 15, 20 years, and are they any further ahead in 20 years than and they have this capability of lying? No. But it's the ones who are honest and do the right thing, and if there is a bill, they pay it and move on. Some of those guys they're worth mid 6 figures after 10, 15 years. And I do not believe at all that cheating brings long-term value. Immediately it might, but long-term, not. No. One of the biggest, I think, policies that I enacted, this is a long time ago, is we don't do anything under the table. We don't. People don't come to us and say, "Look, I'll give you $500. Don't claim it anywhere on taxes or anything like that." We don't do any of that at all. The accounting industry, it's very, very easy. If you do, even especially personal income tax returns, for $100 or $150 or something like that, you can get somebody to do it, and you don't have to, if you just say, here, I'll do it, give you $100, do my personal income tax return, and the guy doesn't claim it at all on his, like the accountant doesn't claim it at all on income. That is actually, unfortunately, it's quite common. There's quite a bit of that going on, because it can. There is not a whole lot of scrutiny in there. Really, that's cheating. That's lying, and that under the table stuff. A couple decades ago, I said we don't want any of that, and so we claim everything. So if somebody gives us $5 for something, I just run the taxes implied through there, and I believe it has long-term beneficial effects on there.
That's one of the first questions I asked you.
Yeah.
I told you I want nothing in the black. I want nothing in the red or nothing in the yellow.
Yeah.
I don't want nothing. Nobody coming back on me.
Yeah.
Do it legally.
Yeah. Legally is where how you get ahead. It's not the corner cutting. Every accountant has their own standard. It used to be, for instance, that the accountant declares exactly what they'll accept and what they don't accept, because they were the gatekeepers. Especially when it comes to non-taxable benefits. This is one of the problems with non-taxable benefits. The gatekeeper is not the accountant. It's the combination of both the accountant and the independent operator. The independent operator has to follow the plan in order for it to actually work. And accountants are not willing to share the liability or share the responsibility of the gatekeepers. I've talked to probably about 12 accountants all across Canada. You write a book, you write articles, and eventually accountants call and say, what are you doing here, and explain it. I can explain non-taxable benefits to a knowledgeable accountant in probably 3 to 4 minutes, and they understand what it is. And they, okay, that's what you're doing. I understand how you would, okay, technicality is fine. And then I ask, are you going to use the system? And invariably they say no. He says there's too much liability and there's not enough margin in the industry to cover that, which is true. Like it's true. There is low. It does make sense if you specialize in it and you do it in volume.
Correct. 10,
20, 50, even 100 or 150. It doesn't make sense to do that. The risk levels are far too high. You have to have hundreds and hundreds of them and be able to have a system, mostly based on technology, in order to fully implement it properly.
I guess that's a question you could ask if you're looking for an accountant. You could ask the accountant, do you specialize in a specific field?
If you ask them, oftentimes, because the trucking industry is so simple, it's, I specialize in it, or you don't really have to specialize because it's pretty easy. The only problem is the vast majority of bookkeepers and CPAs don't fully understand non-taxable benefits as it's applied to trucking. They will understand it, from other industries and stuff like this. That's why it only takes 3 or 4 minutes to explain it to somebody. Oh, okay, that's how you're doing it, whatever, But most basement bookkeepers have not done the research in order to do it. And it took me, part-time study, it took me 2 years to fully understand all of the ramifications, lots of different implications for everything. And it's not really a cakewalk. And then you have to develop the technology around fully applying it. It is, we've been at this, technology-wise, 5 or 6 years full-time. We have full-time tech guys doing this, It's not a cakewalk, but I enjoy doing it. I'd like to talk about audits and reviews for a bit. In the accounting industry, I grew up, my dad was a little bit, I don't know if I said this before, I'll say it again anyway. My dad didn't trust the government very much at all. If somebody used the word audit, or if he thought he was going to get audited, or if he was audited, they're out to get me. They're out to get me. It did rub off on me. You grow up in that, you're very suspect about the government. And then I get into the accounting industry, and so I open an accounting firm, and now you're audited. Audit is not necessarily an automatic, we think you're guilty. Actually, the vast majority of all audits are just, just routine stuff. But I didn't know this, so auditors would come and I'd get all panicky and oh my goodness, what are we going to do, and looking over and sweating or whatever. And it rubs off on the auditor. The auditor looks at you and you go, what's this guy hiding, kind of a thing, And I realized if I was going to stay in the accounting industry, I have to change my mindset. Yep. I have to say, okay, wait a minute. These guys are not out to get me. And they're not the enemy. These guys are just doing a job, and then at the end of the day, they go home to their family. Mm-hmm. It's just normal. And so I had to change my mindset to say 95% of all of the auditors that I will ever meet are really just straightforward, nice guys doing their job, and they go home to their families. It's the 2 to 5% that are a little bit, aggressive or a little bit radical, and or that there's very few of them, and then you just find the way to get around them. Once you find, okay, we've seen this guy, we know what he's doing, we'll just go around him and go through an appeal and whatever and get it done that way. That is a lot of people should understand that an audit, the vast majority of all audits are just routine. They're just like, they're here to verify this, here to verify that, and everything should be fine on that. And realistically, especially even in our firm, 50% of all of our clients who are audited don't even know that they're audited. We just handle it and off and rolling. Actually, the biggest problems in the at CRA, the real people that you have to watch out for, we probably never meet them. We meet the frontline guys, and they're the ones who are generally much more reasonable. It's the higher up guys. There's a few small details I'd like to just go through when it comes to expenses. Home expenses, for instance. There's a certain amount of people who say, "Oh man, my accountant does home expenses," and that's great. Everybody pretty much does home expenses. It's a straight line in there. And realistically, the regulations on it is pretty straightforward. Whatever square footage your house is, that percentage is applied to the invoices. And there's certain things that you can't put in there. Like if you renovate your kitchen for $30,000, you can't put a percentage of that as an expense for your business. So there has to be a certain amount of realistic in there. There are some things you can do. For instance, if you're parking the truck on your driveway and it's a questionable driveway and you put some gravel and beef it up so that your truck works out, that's a very bit different issue than renovating your kitchen kind of a thing. There's a few small details about the business. Your non-taxable benefit is actually different from meals and entertainment. A lot of people think that they're the same. But let's say, for instance, if you have an employee and you go out and you have a meal with them and you're talking about stuff, that can be an expense that has nothing to do with your non-taxable benefits. Okay? So there are certain things that an individual does. Now, it's all done within reason. If you don't have an employee, that could be an issue. Then you try and be reasonable on it. There are some industries that have huge meals and entertainment budgets, but that's industry specific. The independent operator business, I mean, you're not trying to attract the world kind of a thing. You're operating a business, and so there's common sense approach to things that people have to do. There is an issue. There are income tax rules, like the Income Tax Act. It's law, but a lot of what we deal with is actually regulation. I'll give you an example on here. Gifts, especially around Christmas time, people want to hand out gifts and stuff like this. There used to be a whole long formula for things and what's allowable and what's not allowable. What's allowable now is you can give a gift that's valued under $500, provided it does not have monetary value. You can give away a $499 barbecue, and it's non-taxable to the recipient, and it's tax deductible for the business. To give somebody a $10 Tim Hortons gift, that's taxable to the individual receiving it because it has a monetary value to it. There's some guys, for instance, who buy Jack Daniels every Christmas or something like that. That has no monetary value, but you can definitely give it out, and because it's less than $500 value. Now, those are the regulations. Now, what would happen if somebody would buy Jack Daniels every single month, 12 times a year, and say they give it away to the dispatcher? Well, when you're giving a gift, the one thing you have to do is you have to put the name of the recipient on your gift. Some auditors even ask for the social insurance number of the individual.
Wow.
But not necessarily. I've seen them ignore that too. Depends on, if you do it every single month and it becomes a significant, then they're probably going to ask for the social insurance number for it. But if you give a $10 Tim Hortons card away, you have to have the social insurance number on there because that has monetary value, and that's a taxable.
My social insurance number, or
if I would give you the recipients.
Oh wow!
If I would give you a $10 Tim Hortons card, I would have to put your social insurance number, and you would have to claim that on your income tax act, you received $10.
Do you think anybody does that?
No.
Very few. Very few. But that is
required.
That is required.
Here it
It is
is.
absolutely required.
Because I've given a lot of gift cards away,
Yeah. And it used to be
but
probably...
I don't claim them, though.
Yeah. Oh, okay. Well, that's different. That would be different. But for people who do it and use it as an expense for the company, you have to do that. Now, if you don't do that, like again, if you hand out, $120 worth of these Tim Horton cards, is an auditor going to go through all the process to write you up and then reverse all of that? All the paperwork involved in reversing something like that.
It's not worth
it.
Yeah.
And it'll be maybe work on non-taxability. The tax implications maybe $20-$30 or something like that you have to pay tax. It's not worth it for the auditor to do that. But technically they can.
So we'll bring that into the trucking industry. Does that work? Like for you, you maybe do it more often than a truck driver would. Like
we get a lot of that.
Truck drivers
not a
giving
lot.
gifts.
Yeah.
Oh.
Yeah, by a lot. I mean, especially at Christmas time.
Like to customers or to...
No, dispatchers, employees. A lot of that in employees. Now, as soon as like we had one person, I'll change the number a bit, $4,000 gift. And it was like a watch. Somebody gave somebody a $4,000 gift and handed in the receipt. And we say, okay, wait a minute. If you're going to hand in this receipt, we need to know the social insurance number for you to do this.
Yeah.
They did not like that. But it is the requirement on there. Well, they said, well, it was a gift. We should be able to write it all off. You can write it all off, but the auditor needs to know who received that gift,
So they can see
and
whether
so that they
person
can claim it as a personal
income.
income in there. It is. You know what? Really, when you look at it, it's reasonable.
Okay.
Because what would stop me from saying your wife is as an employee, and so you buy a $10,000 car, and you gift it, and you gift it to her. That's just, it defies common sense. One of the best ways to figure out whether something's realistic or not is to work on an extreme case and say, do you think that's reasonable? And then just bring it down to what it's normal. And because then it would be, a $10,000 expense to the corporation, and it would be tax-free to her. That's the implication on it, and that just doesn't work out. Yeah. That's pretty disastrous. It is an issue. Sometimes, I think I even wrote in a book about an unusual thing, and that was like pets. There's some people who write off pet food, which is ridiculous, but anyway. But technically speaking, what you can do is if you have a dog that is a security for your truck, it keeps your truck, technically you can. But technically at the same time, an auditor can say, where's the training that this dog was actually trained as a security dog?
My Bichon is a guard dog.
Oh yeah, realistic. There was one auditor who said that. Where's the picture? And he says, try and get into the truck. And then the dog was in there, and okay. And when the auditor allows people to get away with stuff like this, and then they tell everybody, and everybody finds out about it, the implication is, oh yeah, it can be done. And realistically, no. It's really up to the auditor to make the judgment call. And he didn't have to go into the truck. If you don't have the papers, he can disallow it. So they have a lot of autonomy, and that's why there's a lot of disinformation out there, because people are a little bit they share things that are only half true sometimes in that regards too. So choosing an accountant is, hopefully this has helped people understand that choosing it, there are some great people, but it's not the actual accountant that saves you cash or saves you taxes. It's the system that you use. Because in theory, everybody uses the same system. Once they use the same system, everybody should get the same number. Realistically, there's only something, if they don't get the same number, somebody's standards are different, and then you have to decide whether those standards are appropriate or not. Are they reasonable? Are they or are they not reasonable?
But you could also have 5 auditors auditing the same year. They would all come up with different numbers.
Yeah,
too.
they could.
Like
Very much.
It is such an uneven playing field.
It is. It is. Like we were talking about the TL2 when 25 trucks out of Moncton, New Brunswick were audited, and they disallowed the independent operators the TL2. Everyone had to pay $2,500, and accountants all across Canada said now you have to start keeping meal receipts, and some didn't, and stuff like this. Since then, I've received people who say, yeah, my TL2 was disallowed. I'm going to come over to your firm. Okay, no problem. And yet I know auditors in a different province who were training truck drivers to use the TL2, while in other areas and districts, they were being shut down because of it.
Yeah.
So there's
inconsistency.
disinformation, and inconsistency. Yeah, it's probably, but that is the industry, and it's not pure black and white.
But I think even
industry.
if you went to 5 different accountants, it would be kind of the same thing.
Yeah, because sometimes they have their slightly different standards.
Yeah.
In there. Yeah, that's for
I
sure.
think it's like that in every
industry.
profession. I told a customs officer that one day.
Yeah.
I said, "Why don't you guys all play by the same rules?" He said, "We do." I said, "No, you don't."
Yeah.
I said, "You're saying something totally different than what I was told last week."
Yeah.
It's like that everywhere. So
Yeah.
you just gotta what I think
Roll with the
too, what
punches.
feels what feels right for you. Like
For
you'll
yourself.
when you get to the accountant, I think you'll know
Yeah.
that this one
Like when we went to that first accountant, and they kind of talked down to us, like we kind of felt like
You don't know anything.
we're children.
We know everything.
We know
You
everything.
don't know
And
anything.
okay, I'd rather work with the second one. He was actually a really nice guy, and I really appreciate it, even though we didn't end up using it. You have to really meld with the guy and feel comfortable with them for sure. Yeah, it's a big industry.
mutual respect.
Yeah.
Thanks for stopping by Making Your Miles Count. For further Making Your Miles Count productions, call us at 877-987-9787 or download us at makingyourmilescount.com.